the treaty says very clearly that under Article 4, 2A, that you're taxable on your world income in the country in which you have a permanent home available to him. The only place you've got a permanent home is your place in Palm Springs.
Right.
You're taxable on the world income in the United States because that's the only place you've got a house.
Right.
Now, if you've got a house in Palm Springs, you've got a house in Canada, so you've got a home available to you in both places, now you're taxable in the country to which your personal and financial interests are the closest.
Right.
So you've got 5 kids in Canada, and you've got an ex-wife and 2 kids in the States, and your money is coming from a rental that you own in the States, and you've got Canada Pension Plan and Old Age Pension, and you're still spending 8 months in the States and 4 months in Canada, taxable in the States.
Yeah.
So the treaty takes us. Now, where it becomes a problem is you got an ex-wife in Palm Springs, an ex-wife in Milestone, Saskatchewan. You got a $400,000 place in Milestone, Saskatchewan, $400,000 place in Palm Springs, and you spend 6 months and 1 day in Canada, so you qualify for BC Medical or Saskatchewan Medical. Then you spend 182 days in the States, and well, that's where your golf cart is. Okay, and I've had 2 or 3 guys tell me at the border that all we want to know is where's his golf cart, because that's where he's living.
Right.
Okay, so this stuff all gets, so that's the thing, and the treaty will also govern things like dividends. If you've got stock in a country, you pay 15% tax on any dividends you receive. Right. Capital gains isn't treated, but the rules in both countries are theoretically that if you are a resident of Canada and this is difficult when it comes to the point of being an American, because Americans are taxable on the world income anywhere they go. Canadian isn't. Right. So if you...
So we should maybe just back that up one little bit, because I don't think people understand the difference.
Okay.
Just to clarify, in Canada, Canada only taxes you on residency as you're a resident of Canada. Am I correct?
No, they tax on citizenship too if you can't prove residency in another country.
Okay, there's a fine line,
well,
but it's important.
It's a wide open line.
Yeah.
All sorts of people are being taxed because they think that they're going to spend 2 months there and 3 months there and do something here. And I see Paul Swingle's just arrived. Mm-hmm. If you want to be a non-resident of Canada, then you have to be in another country for more than 6 months to be a resident there.
So if you travel around, you're an oil rig worker and you get posted 3 months here, 3 months there, 3 months here.
Canada can tax you on your world income.
There you go. Okay.
You haven't established a residence someplace else.
Aside from that, though, Canada generally taxes on you have to be resident in the nation to be taxed.
No.
Come again?
No, I got all sorts of cases. David McLean was in Saudi Arabia for 7 years, but kept a house in Canada, came back for vacations, was clearly gone. No treaty with Saudi Arabia, came back. He even had a letter from Revenue Canada saying he was a non-resident, because you can apply, you can fill in a form, NR73 or NR74, there's 2 of them, one for entering Canada, one for leaving Canada, and Revenue Canada writes you a letter saying, under these circumstances, you're a non-resident.
Right.
But David McLean is an example. Didn't tell those banks that he was a non-resident, so they weren't deducting non-resident
He had close
tax.
ties. He didn't sever ties.
Kept his house here, and he kept on coming back for vacations.
What I'm driving at here is the difference in terms of the way the IRS taxes, the Americans tax their citizens.
Well, the American taxes are citizens if you're a citizen.
Worldwide, anywhere in the world.
But America, the United States, allows... let's pretend Richard, who set this whole thing up here for us, let's pretend Richard's an American, and he goes over and works in Saudi Arabia for British Petroleum, a British company. Yeah. The first approximately $90,000 he makes is tax-free as an American. Doesn't matter who he's working for, as long as he's working out of the country for a year. Right. Okay? 330 out of 365 days. He's even allowed to go back to the States for 30 days as a vacation. Canada will do the same thing, letting you have 80,000 tax-free, but you have to be working for a Canadian company, which means that if you go over to work for British Petroleum and you're in that other country, you're taxable on every single dollar, whereas if you were working for
Precision Drilling,
Petro Canada, over there, or Precision Drilling, a Canadian company,
Sure.
in Saudi Arabia or Kuwait or Dubai or wherever it happens to be, then then 80% up to $80,000 is tax is essentially tax free. You get an overseas employment tax credit. So that's just a different method of doing it.
Yeah.
And you can't just set up a company, a Canadian company, and hire yourself to go and work there, because for it to be there, there has to be 5 full-time employees of the company that aren't related to you.
Right. So there are different rules and so forth.
5 owners.
Yeah. What is the biggest difference, maybe just in terms of pointing it out as a case of interest, what's the biggest difference in the way the Americans approach the tax regime versus Canada? Is it?
Oh boy.
In general, things you've seen over the years. This is a general observation. That
I know it sounds almost heretic, but Canada has a lower tax rate now. People don't recognize that.
That's
okay.
When you're talking about when you had federal taxes, state taxes.
Yeah.
Say, for example, let me ask you the question: who has the better tax regime right now for the similar types of income, California or British Columbia?
British Columbia.
By much?
Likely 5%.
That's hard for many people to believe, isn't it?
Well, except that if there's a mortgage, here's the big difference. You want to hear this? This is a big difference. John and Mary live in Vancouver.
Right.
John makes $100,000. Mary makes $40,000. John pays tax on $100,000.
Mm-hmm.
He gets a really good job down in California, and he goes to California, and he gets $140,000. Mary can't work because he's got the job and she hasn't got a visa. When he's in California, he gets to take his $140,000 income and split it between the two of them.
Yes.
As if it's $70,000 each.
Yep.
So he ends up paying tax at a $70,000 rate instead of a $140,000 or $100,000 rate. In that case, John and Mary pay less tax in California. But if John is a single guy making $140,000 in Vancouver, is a self-employed guy, living in a rented apartment, and he goes to Sausalito, California, or Mendocino, California, or Los Angeles, and he makes $140,000. Let's forget about exchange right now. And he's a self-employed individual. He'll pay $8,000 to $9,000 more tax in California than he will in Vancouver. Now, if he happens to have $1 million mortgage, and he's paying $80,000 worth of mortgage interest, he'll pay less tax in California. Right. But under most circumstances, you or I can arrange a person's affairs so that the mortgage is deductible in Canada. Right. And if it's deductible in Canada, it is more deductible than it is in the States, because in the States, you give up, a married couple gives up an $11,000 standard deduction to be able to claim a $10,000 mortgage interest at plus property taxes.
It's hard to imagine, isn't it?
In Canada, you get that deduction on top of it.
Yeah.
In Canada, you get union dues on top of your deductions. In the States, if you pay $1,000 worth of union dues and you make $50,000, you don't get union dues as a deduction, because 2% of your income has to come off the amount.
That's right.
So my experience is that people pay less tax in Canada now than they do in the States, particularly if they'll let us make the mortgage interest deductible.
Yeah. Quite a change from the last 20 years in terms of tax deductibility.
Well, it is. We have.
Well, I guess we're run out of time.
I think we have.
It's went fast tonight.
I'm not even sure what time is it.
It's 8 o'clock.
Is it 8 o'clock? Okay. My watch says 1:25.
You want to call back in about 5 minutes?
I think it happened. Not somebody calling for Paul Swingle?